What if I told you this silver crash was not panic, not random? What if this move was planned weeks in advance by the biggest players in the market? While retail traders are confused, emotional, and selling in fear, smart money is doing something very different right now. And if you don't understand this moment, you risk repeating the same mistake most traders make at every major market turn. Stay with me, because by the end of this video, you'll see this silver crash from a completely different angle. Silver just dropped hard and the headlines are screaming crash, collapse, and chaos. Social media is full of fear. Comment sections are full of frustration. Some traders are asking if silver is dead, while others are blaming manipulation. But here's the truth most people don't want to hear. This move was expected. Not by everyone, but by those who actually move the market. The question is not why silver crashed. The real question is what smart money is doing right now, while everyone else is panicking. Welcome back to Silver Pules, where we cut through the noise and focus on what actually matters in the silver market. Before we go deeper, take 1 second to hit the like button and subscribe to the channel. It helps the algorithm push this video to more serious traders, and it keeps you updated with real silver market analysis instead of emotional headlines. Trust me, you don't want to miss what's coming next. Now let's slow this down and understand what just happened. Silver didn't crash because of one piece of news. It didn't crash because demand suddenly disappeared. It definitely didn't crash because silver lost its long-term value. Silver crashed because of positioning, liquidity, and timing. This is how smart money operates. They don't chase price. They create situations where weak hands are forced out. Look at where silver was before the drop. Price was sitting near a crowded area. Retail traders were heavily long. Sentiment was optimistic. You could feel it in the comments, in the videos, in the tweets. Whenever everyone starts feeling comfortable, that's when the market becomes dangerous. Smart money doesn't like crowded trades. You need liquidity, and liquidity comes from stop losses and emotional selling. This drop cleaned the board. Stops below key levels were taken out one by one. Liquidations accelerated the move. Algorithms did what they're designed to do. Suddenly, what looked impossible just hours earlier became reality. This is not chaos, it's a structure. Here's something most people miss. Smart money doesn't buy when the chart looks beautiful. They buy when fear is high and confidence is gone. They wait patiently while price moves against the crowd. They let emotions do the work for them. And right now, emotions are running high. Ask yourself this. Did anything fundamentally change about silver in the last few days? Is industrial demand gone? Did global debt disappear? Did inflation risks vanish overnight? Of course not. But price moved, and price controls psychology. That's the game. This is where smart money separates itself from retail traders. Retail reacts to price, smart money reacts to behavior. When panic starts spreading, when people swear they'll never touch silver again, that's when institutions start paying attention. Now, I want you to think back to previous silver crashes. Every major move down felt like the end at the moment it happened. Every single time, those moments later became key accumulation zones. Not immediately, not overnight, but over time. Smart money scales in. They don't go all in. Let price prove itself. Another important piece here is the dollar. When the dollar strengthens, metals feel pressure. We've seen this story many times, but dollar strength doesn't last forever. Cycles rotate, capital flows shift, and when that shift happens, silver tends to move fast, very fast. What most traders do wrong is they focus only on direction, up or down. Smart money focuses on timing and risk. They already planned this move before it happened. They already know where they're wrong. Retail traders, on the other hand, enter emotionally and exit emotionally. Right now, smart money is watching two things closely. First, how silver behaves after the initial crash. Does selling slow down? Does volatility compress? Does price start holding instead of falling freely? Second, how retail sentiment evolves. Are people giving up? Are they swearing off silver? Are they calling this a scam? That's usually when the market starts setting a floor. This doesn't mean silver has to explode higher tomorrow. It's not how this works. Markets transfer money slowly from impatient hands to patient ones. Boring price action after a crash is not weakness. It's often preparation. And let me be very clear here. This is not about blind optimism. Smart money is not emotional. If silver breaks key long-term levels and stays below them, they will step aside. Discipline always comes first. That's another difference between smart money and retail. If you're still watching this video, you're already doing something different. You're trying to understand instead of react. And that mindset alone puts you ahead of most participants. This is why channels like Silver Pules exist. Not to hype every move, not to scare you into clicking, to help you see the bigger picture when the market gets loud. Now here's something interesting. Volume behavior during crashes often tells the real story. Heavy volume on the drop, followed by declining volume on further downside, usually means selling pressure is getting exhausted. Smart money watches this very closely. They don't need price to reverse immediately. They need confirmation that fear has done its job. Another sign is how silver reacts to bad news going forward. When bad news stops pushing price significantly lower, that's when things start to change. Markets move ahead of headlines, not after them. So what should you do right now? First, stop letting fear dictate your decisions. Second, zoom out. Look at silver on higher time frames. Look at historical zones where price reacted before. Third, accept uncertainty. Smart money never needs certainty. They manage risk and let probability work over time. If you made it this far, comment below and tell me what you think. Do you believe this silver crash is manipulation, or do you see it as a setup for the next big move? I read the comments, and your perspective helps this community grow stronger. Also, if you found value in this breakdown, share this video with someone who's confused about silver right now. One share can genuinely help someone avoid a bad emotional decision. Silver markets are designed to test patience. This crash is doing exactly that. It's the ones who survive are not the smartest. They're the calmest. And while everyone is focused on today's red candles, smart money is already thinking about what comes next. Stay sharp, stay disciplined, and stay curious. This is not the end of the silver story, not even close. I'll see you in the next one.